TJF Warriors, Alexander, Michael, Bran, how are you? Yes, you're the Heralds, and Sinatra, AJ, everyone doing okay? TGIF, everyone hear me? Can you guys hear me?
Fine, mate.
I was hearing some strange sounds, feedback sounds earlier. I don't know if it was me or you guys. Anyway, here we are, Dixie. See you, Ryan?
Yep, got it,
Yeah,
mate.
kind of a throwover. We did take out the low, the move. If the RSI was above 30, I would try it, but I guess, wait and see if it gets back inside the wedge. I think this is interesting today. Look at this daily. You could stay long if you want. My contention is in the months ahead, I bet we'll have a chance to buy it in the low 1800s. Silver, I don't know. Maybe silver will pull back to 25.50 if gold breaks $200. Anyway, I'm glad it's Friday. How about you guys? S&Ps, you get a nice reversal day, and then it gives it all back, and here we are, 41.50-ish. Jury's out. Didn't do anything wrong. We have a whole day left. So
it's looking a bit what happens next, isn't it? That S&P.
Yeah. And Gable's really been lagging lately, and here's a daily. There's compared to the euro, the RSI structure is a lot weaker, but I'm not going to try and top pick it today on a Friday. I think for the week we still had, I don't know, let's see, depends how we close. Yeah, it's still a nice looking week. Euro's still a great looking week. Is euro, you think euro has 112 in it, came in?
Good morning, Dale. Good morning, everybody. Well, I mean, I was talking about it on the Flow Show, and yes, if those big break zones in the high 109s hold, 112 could be a decent target for this move. But we'll have to see if the US data continue to weaken. We've just had the big banks earnings out, and globally they are beating expectations, where most of the people were thinking that the earnings, the global earnings this time should be weaker, but they are not. They're not really weaker. So I think we have to. The start of next week, I think, will be very important, together with the data today, because we are half April. Perhaps some seasonalities can start to wane. It's going to be interesting. But for as long as that break holds in the euro dollar, I think there is a fair chance we are on our way to 112s, yeah, and which is going to be a big zone, by the way, if we get there.
Yeah, I'd be a seller up there, mid 111s next week. So what do you guys think of with all the dollar weakness we've had? We've not just had one higher low in US dollar yen. This is the second higher low, with the dollar making, this is when the yen made its low, and the yen made a higher low, and it's making a second higher low here. Is that a market message?
I think that the pattern you show there shows how data dependent it is. That first big candle, was that the CPI day?
On what, the yen?
Yeah, that's that big fat red candle there. The first one, yeah, was that CPI?
I'm not sure. Not sure what it was. So
yeah, I believe that is.
And
good morning.
The second one was PPI yesterday.
Okay.
Was it?
Yeah. So
yeah.
This was
what
yesterday.
That tells me is the market's waiting for each piece of confirmation before continuing to do what it wants to do, which is sell the dollar. So it got CPI, made a move. PPI was a risk that came out soft. carry on selling. I think retail sales are going to be the same. It's expected to be softer. And if it doesn't surprise to the upside, I think we probably get another leg lower, similar looking candle.
You mean to like new lows or just?
No, I think we go through at least 132 today.
Okay. All right. So you're not impressed that the yen has put in two higher lows with the dollar making two lower lows.
Yeah, I mentioned that on the flow show also, that it is. I think the dollar's a rally sell, but then you look at that picture and it's showing a short-term uptrend in dollar yen. Like you say, it is making higher lows, and it's making slightly higher highs. But that goes back into March. And I think that the market is in dollar selling mode. So, but it needs the evidence to do that. I think if we get a really worse than expected retail sales, 132 goes, and then perhaps we're looking at heading towards 130.
Man, it did not take you long to get back in the saddle, cowboy.
Yeah, well, I'm sitting on my shorts and they're looking okay as we sit here today.
All right, there you go. So, once you know how to ride a bike, you know how to ride a bike, right, Ryan?
Yeah, and you learn how to fall off them as well.
yeah, without training wheels. So, Aussie's still bringing up the rear, but doesn't look bad. Maybe 69. I was thinking this, and when the dollar makes a new low, and since why fight it? It's the relative weakness that maybe we make a move up towards 69, about halfway back, 68.80, and that could be a pretty good sell zone. 69 was pretty big if you look left. What do you think?
Who, mate?
Well, Blake has been talking Euro Aussie, so he's got kind of a somewhat more negative view on Aussie. Has talked about its relative weakness for weeks.
Well,
would you look for an outright sell up here, bro?
Well, first of all, and good morning, everybody. The 68 cent level, which obviously we're knocking our head up against right now, that is a 38% retracement of that entire drop. So you see your little colored areas, your colored fib levels, everything to the right of that full drop, we're just knocking our head up against the 38% retracement, which is 68 cents. So now when you're talking about today's data, I'm assuming we're going to get a binary reaction from all dollar pairs following the retail sales. So, and I'm expecting the consumer to start to show some weakness here. So I do think that we're going to start to see retail sales data underperform the market moving forward from here on out, actually. And so if that's truly the case, then yeah, I think we could really see a move up to 69 cents. I'm going to talk about the outcomes of today's data and kind of the setups that I'm looking for, but I'll talk about them in a few moments. But just to answer your question real quick, that was the long answer. Short answer is 68 cents.
You've been hanging out with Steve, haven't you? That's right. You came to
your house. I did. Yeah,
you're infected.
You know what it is it's just Dale, it's getting up at this time in the morning for us on ever since the time change from a couple weeks ago, I've it's getting all my thoughts straight at this time of the day, so
yeah. Anyway, so I hear an owl outside, Blake. So let's take it to Stell. How are you today, buddy?
Actually, I don't think he's here. He is actually on a different island. It is Easter Orthodox Easter weekend this weekend. So he is with his family on some island of, I could tell you here in a minute, but some one of many Greek islands they're visiting. So there it is.
That's nice.
Yeah.
Gosh, what a life those guys have. So, Jane, I want to ask you about Bitcoin. Unmute, please. I know you're a crypto trader. Just like to get your view. All right, so, crypto's still moving up.
Crypto's still breaking higher. I tell you, Ethereum
led by Ethereum. Yeah,
Ethereum's almost it almost completes its bull flag pattern that comes in at 2,200. I tweeted about it yesterday. That it's still bullish, and it's something that if you watch or just read the ForexAnalytix app and analysis, it's been very clear for the last couple of weeks that it's just bull flagging it, but we're getting close to the top, and that's another reason why I really am thinking that today we've got to be really extra careful. Do you guys want to talk out some of the scenarios of today?
Yeah,
you
go ahead,
ready?
buddy.
You ready for it, Dale?
I think I could handle it. Yeah.
You think you can handle it? All right. So let's discuss it, since you will have you're going to have a nice interview with Amelia. We haven't had Amelia here in a while, or you haven't had Amelia here in a while, have you?
No, it's probably been years.
Yeah, she's great. So you guys are going to really
doing a new thing.
Yeah, she was with God, what F.A.C.E or data? I forget exactly who.
Exante.
Yeah, she was with Exante for a while, and because I've talked to her for a few different times, and she kind of went off into the shadows for a while because she was with Exante data, and then now she's doing whatever she's doing. So it'll be interesting for you to get caught up with her. Anyway, before we get into that,
I have her ex-boss. I have Jens Nordvig.
He's awesome.
So I have him scheduled for May 5th. It's an NFP day, and he's rolling out a new product, so he'll be with us early May.
Well, let's make sure you keep Amelia and him, maybe, because you don't know how things went. So
yeah, I'll
just kidding.
You know how diplomatic I could be.
Yeah, I know. All right, so
just kidding.
Speaking about Ethereum, you can see how the Ethereum has broken out of triangles. We've gotten a bull flag pattern, and obviously we've extended gains. You can see the analysis all week. We update these charts throughout the course of the week. The reason why I bring this up is because when you're looking at these cryptos, let me pull them up really quick. Okay, here's Ethereum. You can see how we're oh no, this is Bitcoin. I'm sorry. Here's Ethereum. So you can see how Ethereum is getting close to completing its flag pattern, and Bitcoin also bullish wedge pattern. We knew that 29,000 level was eventually going to break, but notice where Bitcoin's at. Bitcoin is very close to its 50% retracement right here. Okay, and then you also have Ethereum, which is near this 127% extension and also flag pattern. So I want to talk a little bit about today, and I want to get some input here with K-Man and Ryan, since you guys, I don't get to chat with you to the extent that I chat with a lot of the ForexAnalytix subscribers, because you guys are in Europe, you guys are done for the day. I do the daily roundup in North America. I chat with the ForexAnalytix subscribers on my own, just as I'm sleeping when you guys are doing the flow show, right? So it's that's kind of the thing about ForexAnalytix, is we're covering multiple time zones, and we have analysts at different times. But I want to give you guys my thoughts on today's data. So I'm expecting weak data. Now what we get following the news, who the hell knows, but I am expecting that data to come in a little weaker than expected today. So if that truly is the case, and you can see here's all the expectations, at least what investing.com is looking at. Bloomberg might be slightly different. Same with FX Street or wherever the hell you're getting your news, or even data flash here might be slightly 0.1%, give or take, depending on where they're pulling their data from as well. So let's say that the data does come in weak. What is the initial response is going to be in equities, in my opinion, is going to be a knee-jerk reaction higher, because everybody's going to say, oh, well, look, the consumer is weak, so we're going to get this instant knee-jerk reaction, or excuse me, knee-jerk, just say reaction higher in stocks, because people are going to feel that the Fed is close to being done. And you'll see equities probably plow a little higher. And in this case, as I drew out for the ForexAnalytix people last night, we're probably going to get a move above the highs in the S&P, because double tops, they build stops, right? That's a good old saying, or triple tops build stops, double tops build stops. Because when people think there's a double top out there or a triple top out there, that means that, the likelihood of us breaking above those levels or below the levels, if it's a double bottom, become quite high, because everybody says, oh, that's a high, that can't be broken. I'm going to short it, and then I'm going to put my stops above it. Yesterday's PPI data shot us right back up towards those highs. Now we're at risk of breaking them. And, you throw in some weak data today, guess what's going to happen? We're probably going to push right above the highs. However, before you get too excited about being bullish equities, the point I want to make here is that if we get weak retail sales data, which again, I'm just thinking that the consumer is probably stretched beyond, its means now. You look at credit card usage data, you look at, inflation data, you look at cost of energy going higher across the board. We don't have to, extrapolate everything about inflation that's going up, or all the prices are going up. They just are. And I even read the price of a new car loan. The average cost of a new car loan is $1,000. Yeah. Isn't that crazy, Dale?
Monthly payment. Yeah.
Monthly payment. So, and your energy costs are going up 15% this summer. Mine are. So, in the US. So anyway, you think about, you put it all together and you take the average household income versus, their bills. And I think you're going to be stretched really thin moving forward for the retail, or just the average person, excuse me. So with that being said, we're probably going to be in a situation where retail sales start to slump, minus anything that needs to be, food and energy, which, are fixed costs. You're going to start seeing costs cut, whether it's, look, credit card bills. So what? I'm not going to pay them. You guys can, ruin my credit. That's first to go, right? I'm not going to pay my credit card debt. Fine. Next is going to be car loan. Well, it's between my house and my car, and my wife and I, we have two cars, so we're just going to share one. So let's get rid of one car. Let's just let the bank repossess that. But we have to have a home, and we have to put food on the table, right? So consumers are going to start making these very, very hard decisions moving forward. In a services-driven economy, which is the U.S. economy, that's problematic. So the reason why I say all of this is bad news has been equating to good stock market reactions. I don't think that's going to be the case moving forward. Whether it's today, whether it's next month, whether it's 2 weeks from now, we're going to get to a point where bad data is just downright bad for the economy, therefore bad for stocks. I don't know if we're there yet today, but I think we're very, very close. So if stocks do punch above the highs, I actually expect that rally to fail today. And so therefore, if you look at the dollar, and then this is where I want to get some thoughts from, K-Man, Ryan, Dale, love to hear your thoughts here. If the dollar index breaks through these lows, which I think it will, following the data, I think we're going to push right down to the support zone. You can see it right here. Broken trend line, maybe even close to the 127% extension. I think 100 will end up holding us. 100, it's a big figure on the dollar index, and we might actually see a reaction from there. So you see a push below the lows, stop everybody out, get the euro above 111, maybe put the cable above 126 really quick, and see some dollar weakness before you see a reversal. Anyway, I just laid it out for you. My thoughts, love to hear your thoughts. So Ryan, what are you thinking here?
Well, the market is set for a weak number. So if it comes up around about expectations, as I say, maybe we get a bit of reaction further selling the dollar because we're over the risk hump. It plays to the narrative. The surprise will be an upside number in retail sales. I think if we get that, any rally in the dollar will get hit, depending on how big the variation is. Got to be careful as always on a Friday. If it is a big beat and the dollar rallies, you're going to see a lot of short-term short bailing and taking profit, and that might accelerate.
That would set up like a big. I mean, you can see how the dollar index just held that. If we do get a beat, Ryan, I mean, that would be big support being held, right?
Yeah. And then you get a move up. I think that'll just give sellers the incentive to come in and smack it again next week.
All right. Yeah, I could see that. Now, I have to admit, and I told this story the other day to the ForexAnalytix crew. There was the convincing moment in my life was in 2010, where I decided at that time I have to always think twice about betting against the American consumer. Quick story. Just I'll make it really short. It was my 20-year high school reunion in 2010. So in 2010, I was traveling to Phoenix, where I live now. During the financial crisis, people were foreclosing on their homes. House prices have dropped 50%. And we were at the shopping mall just before the reunion. We were at a really busy shopping mall, and I see people just walking out with like tons of stuff, like iPhones, expensive jeans. Just everybody's like, walking through the mall carrying all these bags, and we're going through a financial crisis. It's 2010. I'm like, where are all these people getting this money from? Everybody's foreclosing on their homes. And my friends are like, well, that's it. They're foreclosing on their homes. So now they have extra money. So they go and buy the newest iPhone, $100 pair of jeans, $150 pair of jeans. They don't care. Now they got this extra money to spend because they're not spending. And I'm like, that is absolutely bizarro town as an American. I mean, as a European or an Asian or anybody in any other part of the world, you would think that is knucking futz. But, as an American, you're like, that's a par for the course, right? That shows you why it's really tough to bet against the American consumers, because they're going to find money to spend on pretty much anything wherever they can. So anyway, I just need to throw that out there. K-Man, what are your thoughts on today? What are your thoughts on today? It's a great story, right?
Yeah.
I forgot we were on F.A.C.E here.
Okay.
No,
what's up?
It's as we said before. I mean, the market is expecting a weak number. Get a weak number. We're probably going to continue the same way as we have been trading most of the week, with likely the euro being a bit better. But I'd like to, again, as you know, I'm also not only looking at dollar pairs but risk. I think if the retail sales don't come out too badly, we can see a decent rally in risk. And I'm not only talking about the equity markets. I'm talking about like some crosses, like perhaps euro yen or so. If you really get bad numbers, and then as Ryan says, there's probably 132 is toasting dollar yen, and we are going to gradually move higher towards 112 in the euro dollar. It's going to be interesting watch on those antipodians, because the Aussie dollar, as you say, is close to an important level at 68, and the Kiwi as well at 63, figure 15, figure 20. It's an important zone. It's really an important level, and we are banging against it. So because if it breaks through 63, figure 15, figure 20, it's 64 could be visited really quickly. But therefore, we for the antipodians to rally, there we would need not too bad numbers. You see what I mean? Because they are going to do better in a positive risk environment as well. So it's a lot of it will depend on risk as well in this afternoon. And so I'm going to keep an eye on not only the dollar pairs, the major ones, but also what's happening in the risk environment.
Yeah, and that's the great to point out too. And let's not forget, the big banks have a lot of big banks have reported this morning. We've seen Wells Fargo, we've seen JP Morgan. If you wonder why the Dow is significantly higher this morning, or has reversed higher and put us into positive territory this morning. It's these big banks have been, they're going to keep risk up, and that shouldn't be a surprise to people. I mean, it's if I'm, Joe Public or Sally Public, and I've got my money at, Harvester's, Southwestern Regional Bank in my local area or whatever. I'm just making up a name here. And, all these worries about, Silicon Valley Bank and everything else and First Republic and all that other stuff. I'm going to be like, let's go move my stuff over to Citibank. It's Citibank or Bank of America. So it shouldn't be surprised that the big banks are doing well.
No.
It's the regional banks that I think, are going to be the bigger issue moving forward. Go ahead.
If I may, Blake, I think the regional banks doing worse should also not come as a surprise. I think this earnings season may actually be decided on the non-financials, in my opinion. Whatever is has to do with the consumer or the manufacturing or the services sector, but non-financials, I think they may be the clincher for this earnings season, actually.
Yeah, I mean, because it's known, right? It's like, okay, that shouldn't be much of a surprise, but nevertheless, it is helping risk this morning, and that's so it would just continue to help risk as we move higher. So, but yeah, great points. Before we have, let's say, 3 minutes or so, 3.5 minutes, Dale, any last minute thoughts here about what you're feeling about the markets before we start looking at this news?
Okay, well, I still believe it's all one market, and it was proved again in this recent 3-week, 4-week period of a weak dollar, meaning you could be long the world. And I'm waiting for that emotional flush under par in the Dixie. And when the dollar turns, it will take everything down with it, just like while the dollar was declining, it took everything up with it. Those are my thoughts going into next week.
Okay, well, I can't disagree with you that it's one big trade. I'm gonna actually get rid of this because it's annoying me when we look at the charts. I'm gonna get rid of this little support zone that I've got because we're in this like red.
Buck, man, all about the buck. So
it is about
maybe
the
we
buck.
go to your. So we go to your levels you were talking about yesterday and today. I'd like to see some better RSI readings, but maybe we get them, next week. But I don't think Euro takes out 112.
What we got to be watching too is we got to be watching precious metals here. They've been really strong. Gold is very divergent. Silver is too, and daily sentiment index is pretty extreme. Ryan, do you have any last minute thoughts? We got about 1.5 minutes, 2 minutes.
No, just take care. Just take care.
It is Friday, right?
Yeah, look at all the parts of the number. You got the headline number, then you got the X autos, and you got the control group, the core sales. So just keep an eye. We're looking for a big variation, I think, to get a real market move. But as I said, the upside, any plus numbers, and that dollar's going to rally.
Yeah. Okay. And yeah, I mean, betting against American consumer. I just told you a really funny story, but I mean, it's true. I mean, I'm going to cash in all of my pennies that I've saved up for the last 30 years because I really want a new iPhone.
They don't save. They don't save. That's why.
It's like opposite of different cultures.
Yeah.
Anyway, especially like Asian cultures, it's funny because I'm half Asian. So anyway, but watch the markets here. Here's the data that we'll be looking at. You guys scream it out if you see it. And in the meantime, since we do have a minute, make sure you check out ForexAnalytix. It's only $1 10 days for 10 days to try it out and be inside of our community. This is like how busy our community is. Super busy community of just everybody talking and chatting and a lot of conversations going on. So anyway, check out ForexAnalytix. That was my quick spiel before we go into data. So data should be out in just about 30 seconds. K-Man, any last minute thoughts?
No, not really anything else that I've been saying. I was just saying, if we get a mildly weak numbers this afternoon, metals could put in a kind of a top, and then we reassess next week.
Yeah.
Kind of the feeling I've got.
Yeah, possibly. It's possible. Yeah.
We're on it.
Yeah, it's worth noting for sure. All right, let's retail sales. We are expecting. Here we go. Let's see how are markets reacting here. Do you guys see
Yeah,
it?
Down
Retail
1%.
sales
Down.
it's weak.
Down.
Big down.
Yep, dollar is getting smacked. Okay, let's see how, it's interesting. Dollar's coming down. Stocks came down too. Stocks didn't like the fact that we got weak retail sales, and
No, weak numbers
weak number
are bad.
right? And that's something that and you can see yields are popping right now. Look at the 10-year yields. They are actually ripping.
So why would yields be going up on weak numbers?
I don't know. I mean, other
and
than
the dollar is leaving a pretty good wick here too.
Dollar is definitely firming, and probably for some risk aversion reasons, I would think. But it's interesting reaction. Before Dale takes over, Ryan, K-Man, initial thoughts here?
Yeah, I find it a weird reaction as well that the short end especially is ramping. We're back above 403, 404 on the 2 years. I'm not sure about this one.
Yeah. There's the
so
great advice to be careful, to take care, Ryan.
Yeah, very strange move. But let's watch it play out for a bit. I mean, the control group, the core sales came in as expected. And so take out the autos as well. That was down 0.8%. Import prices were down worse than expected, minus 0.6 versus minus 0.1 price. A big drop there in costs coming into the US. Export prices were down as well, minus 0.3%. So that's all playing into the inflationary thing. But again, I don't know why dollar's rallying and yields are rallying. Color me surprised.
Yeah, I'm not sure, but I would venture to guess that and you're seeing precious metals roll over too a little bit too. So which that's not super surprising with the well, actually it kind of is.
Blake, I don't get DXY anymore. Where's the VIX on DXY?
It actually should be over to you. Let me but first of all,
I'm just curious. I could get it. You could just Skype it to me, because I think it would be under 10.
DSI for what were you asking for?
VIX.
For VIX, let's take a look. I'll pull it up right here.
See, so you get all this stuff, guys, when you join. This would cost you money.
24. So we're getting low.
Wow, I can't believe it's that high. Okay.
Yeah.
All right.
Yeah. So look at gold. Really starting to test some support here. All right.
It was a 3 drive.
Yeah.
Anyway,
all right, Dale, have a great interview.
And Blake, I have a safe trip and victory to Roman.
Hey, thank you. And folks, just so you know, when I leave, usually crap goes crazy, but I'm actually just leaving for out of town for the weekend, so nothing should happen.
Oh, all right. So all right.
Hey, K-Man, Ryan, Dale, thank you, gentlemen, for being here today, and happy Friday to you all. Yeah,
thanks, Stream Team. Great to have you back, Ryan. Thanks, you very much, and really appreciate the insights that you provide daily, twice a day on the Flow Show. Guys, if you're up early, check it out. And here. And I have the pleasure of being able to say hi to Amelia Bordeaux. It's been such a long time. Amelia, how are you?
Hi, I'm well. How are you? Can you hear me?
I'm doing you're coming in loud and clear.
Great.
Do you have anything that you want to share on the screen, or do you want to use your camera?
I do want to share. Let me see.
Okay.
Let me see.
So what's it been, a few years since you've been on F.A.C.E?
Yeah, I think it's maybe from the pre-pandemic.
Oh, wow.
Yeah. Hold on.
So it's the bottom button, bottom green button there for share. So Amelia, has been, on all the major financial networks, and I believe that she has a new asset class that she's representing, and kind of a a
I
different road, that
do.
you're on a different road. So
I am on a different road now. Yeah, I'm sorry. It's looking like it's blocking me on some sort of security setting. I want to
really?
share this PowerPoint. Let's see. Advanced.
So when you click share screen, it's not letting you in. Is it Zoom
This
or you?
allows Zoom to share your screen. Open system preferences to grant access. That's strange. Let me see if I can do that quick.
Otherwise, we could just talk about it, I guess.
Let me see. Oh, maybe here it goes. Let's see. Blocking me on a security setting. That's strange. I use Zoom all the time. All right. Is this working now?
I don't have any diamond charts.
No. Oh, here we go. This looks promising.
Okay, it's coming up. All right.
Can you see it now?
Yeah, I saw a guy on CNBC, probably one of the founders, I don't know, many months ago, talking about how they've turned diamonds into another asset class that
That's right. Yeah.
normally isn't available to, retail investors. So take it away.
Okay, and you can see this, right?
Yeah.
So I'm with, first I'm just going to talk quickly about our commodity, introduce you a little bit to us and what we're doing. And then I do have things to say on markets. So I'm with Diamond Standard now, and Diamond Standard created the world's first regulated diamond commodity. And this is what they look like here. There's a coin and a bar. And each coin and each bar are geologically equivalent to each other. So while they're not exactly the same, they have geological equivalence, which makes them fungible. And that was the big breakthrough that Cormac Kinney, who is our founder, who you saw on CNBC, came to, and that kind of took years for him to do. And there's significant patents around this and significant IP in this company. It's a fintech company and a commodity company. So we manufacture these diamond bars and coins, and you can kind of see here in the purple dots in them, if you can see that, those are all the GIA certificates. So
what are the bars made out of, Amelia?
They're resin.
Okay.
And they have a computer chip inside with a blockchain token. So what happens is all of this is stored on the blockchain. And if you buy and hold the physical commodity, which is these coins or bars, they're stored, if you would like them to be, at Brinks Global Custody in Delaware, which means you don't have to pay sales tax on them. And it also means that we have a spot market at Diamond Standard to trade these. So you can come onto our spot market if you own a coin. And if you want to buy more or sell it, you can do that if it's held at Brinks. And all that's exchanged is the blockchain token. So you never have to move the actual physical from the vault.
What are spreads like? What are spreads like between the buyer and seller?
Right now, they're a little wide. We have just over 4,000 coins in existence. And I will go through kind of really quick the investment thesis, and you can kind of understand why that is in a minute. But because these coins and bars are fungible, which really was the breakthrough for diamonds.
What does fungible mean?
Fungible means kind of like a gold bar is equal to another gold bar. This coin is equal to another coin. So they're interchangeable.
Got it.
So they have been approved by CME Globex as good for delivery. So that's important in the future, to make an ETF, to make, further financialize these products, which is what we intend to do. So this whole process of making the coins and buying the diamonds is all regulated by the Bermuda Monetary Authority, because they are the leaders in regulating blockchain tokens. And it's audited also by Deloitte. And so kind of coming back to your question about spreads, most of our investors buy and hold. And the reason for that is relative to the other precious metal space, diamonds are underallocated. So while the other precious metals, they hold anywhere from 15% of above ground supply, these are investors holding 15% or more of above ground supply of silver, platinum, palladium, gold. And you see that here on this chart. They only hold 2% of above ground diamonds. So, and diamonds are $1.2 trillion dollars, meaning that's the total size of that, market that's unallocated. Okay. So it's underallocated to basically the investment community. And we're here, Diamond Standard wants to financialize the commodity. So this is kind of our path that we see to financialization. We have the bar, the coin, the fund. We have a fund. I'll tell you about that in a minute before I get going on markets. And then we're working on futures, options, and ETF. And so what we kind of see over the course of the next, say, 3 to 5 years is a position build, right? As we ourselves buy more diamonds to make more coins to back, the ETF and things like that. So this is kind of similar in our minds, at least, to the launch of, say, like the GLD fund when gold launched the ETF in 2004. And also a little bit like the Sprott Uranium Fund when Sprott launched the Uranium Fund a few years ago, and that natural price rise and position build that took place when the fund was launched. So while people can come on the spot market and trade it, most of our investors see this as a buy and hold.
Okay.
As it's further financialized. And if you want to learn more about it, this is a very basic presentation, but there's obviously a lot more to this. Just go to diamondstandard.co, not .com, diamondstandard.co, and you can reach out to us or take a look around the website and see what you think. So, yeah, it is very interesting. It's good and nice for me to work in something that's a brand new asset class kind of in 2023. You don't really come across. I mean, I've been in the markets almost 20 years, and with the advent after cryptocurrencies, you haven't really seen a new type of asset class. And so it's fun and exciting to kind of work in one now.
Okay, you're a great ambassador.
Oh, well, thank you. So I want to get back to macro markets. And so kind of here we are, and I'll touch on some of the stuff you guys talked about in the first half hour. But, Q1 was really exciting. I won't review too much, but I'll take you to where I think we're going. January, the Fed had signaled a shift in the pace of rate hikes from 25 to 50. Then February, we had like this surprisingly upside surprise to economic data in the United States. It showed real resilience. And the Fed flipped and turned hawkish again, thinking they would have to continue and clips of 50 basis point rate hikes. And then obviously in March, we had that banking sector turmoil and huge like bond market volatility, just really crazy bond market volatility. And if you just look at this only goes to the end of March, but you can see here in equities at the top, like the flip from Fed was really hawkish and interest rates were rising in February to, rate cuts got priced in March. So equities were flying. And the same thing, kind of gold and silver. You had a strong dollar in February really weighing on, gold and silver and our diamond commodity. And then at least for gold and silver in March, you had the dollar weakness and the lower yields really, and a safe haven bid too.
Silver was really phenomenal. Haven't seen a month like this in a long time. Yeah.
Yeah. Okay. I mean, it
Bitcoin
finally decisively broke that like key level at 24. And is it a break 25 yet? I think it's, I don't know, but.
Yeah, it's near 26.
Yeah, silver's on fire. So
you didn't get a pop in Diamond X with the rest of its competing.
I don't know how the chart. We had a little bit of a pop like the week of the actual banking sector turmoil, the SVB, like that March 8th through like the 12th or something. We did pop, but you have to remember right now, diamonds are. The majority of gem quality above ground diamonds are bought by consumers for jewelry. So they haven't been completely financialized yet. Okay. But we imagine, we believe, we expect that as further financialization takes place, diamonds will act as a safe haven.
What about the, Charles is asking about, is there impact from synthetic diamonds?
The interesting thing about synthetic diamonds is the answer to that question is these lab grown diamonds are plentiful, right? So these new companies are popping up all the time with, you know, lab grown diamonds. So they can print and manufacture these lab grown diamonds. The supply is infinite. But for natural diamonds, the supply is really fixed and it's going down because a new mine hasn't been discovered in about 20 years.
Like every mining industry, there's no new mines coming online.
Yeah, so the supply of natural diamonds is really dwindling, you know, and so the issue with that, especially if it's financialized, is you know, luxury consumers are always going to want natural. And so what will happen is like kind of the mall jewelry stores will all switch to synthetic diamonds because they're probably not going to be able to afford natural diamonds over the next like 3 to 5 year horizon. They're going to get too expensive as supply dwindles.
People can't buy eggs.
Yeah, right. And the weird thing about it is buying a natural diamond, it will hold some value, you know, in the future. It depends on like how you decide to sell it and what type of diamond it is, if it's rare or if it's 1 carat or under. But a synthetic diamond, it's kind of like a new car. Like once you take it out of the store, it immediately drops in value. There's no resale value on a lab grown diamond.
Okay. There you go, Charles.
So just how volatile the bond market was in March, this is monthly 2-year yield change. So the monthly change in basis points in the 2-year yield all the way back to 86. And the point on the right is March. So look at the drop in March in the 2-year yield and basis points. It's on the scale of what happened to financial markets at 9/11 or, you know, the Russian debt default LTCM more than COVID. So this was like huge bond market volatility we saw in March.
Yeah.
And obviously the yield curve, you know, shifted lower. And so I just wanted to show you, this is the Fed's March forecast, the dot plot. And then just the thing I wanted to show you quick about here is for 2025, look at the dispersion in forecasts. It's all the way from like 2.5 to like 5.6. So there is no clear path. You know, obviously there's a lot of disagreement within the FOMC on the future path of rates and how the US economy will shake out. So there's a lot of uncertainty.
Do you think we've seen the high in the 10-year up there at 430?
Yeah, I do. I do think we're going to start to, just come lower.
Okay.
We have kind of, you know, both equity and bond market volatility have come off, but bond market volatility is still elevated. But you do have a real spread between bond and equity market volatility. And I guess as you know, you guys noted earlier, equity markets are kind of chugging along in the US. Like they're kind of skipping any kind of economic slowdown. It's like the Fed hike, now they're going to cut and, you know, we're going to be fine. So equities have been surprisingly resilient, you know, post this kind of banking turmoil that we saw. And, you know, we just still have, you can look at CPI on the right, we still have CPI pretty elevated, coming down, but elevated. And I would just note that the headline CPI, which is that gray line falling, coming down from 9, a peak of 9 to like a peak of 5, now 5, latest reading. You know, the latest decline in March was led by energy. And we just had that OPEC announced production cut that's going to start in May and run through the end of the year. So I would say just for headline CPI, that's not helpful.
No, it isn't.
Yeah. And just quick looking at credit conditions, all of these were out post the banking turmoil. So they surveyed through the end of March. And this is small business credit conditions. Is it easier or harder to get a loan compared to 3 months ago? And you can see it's getting harder.
Where was that low point in the GFC?
Yeah, that was in the GFC.
Okay.
So we're not approaching that, but it did move, got harder. Yeah. And this is New York Fed's consumer expectations for household credit availability. Is it harder or easier to obtain credit than a year ago? And it took a little leg up. So household credit access perceptions are deteriorating post that banking sector kind of turmoil. But of course, they have been deteriorating since the Fed started hiking rates back a year ago. But now they're kind of at a high in terms of tight credit.
So what are you thinking with all these things? market-wise, dollar,
Yeah,
market,
just
what do you
quick,
think?
one last chart and then I'll tell you. I just wanted to bring this one up because this is like pretty important. This is the Fed funds forecast here in black.
Yeah.
And this is the market, the futures, Fed funds futures pricing. So what the Fed is forecasting and what the futures are pricing are very, very different from each other.
They sure are. So what do you think? Who's right? Is the Fed going to cave, or maybe their pivot is just like that previous chart, and they just hold steady. They
I mean,
pause,
if they cave, it would be the fastest like turnaround time in recent Fed history. So this is like the peak rate here, months of hiking, months to first cut. You see like 5, 7, 14, 7. So if they hiked in May, which is the market's expecting, and they cut in July, which is what the market is pricing, that would be a turnaround time of 2 months. That would be really, really quick. So I do think, absent another kind of banking shock, probably rates have to kind of reprice at least at the front end. And that will be dollar supportive when that happens. That could move dollar yen higher. It could cause some volatility in gold. Even though gold is clearly very strong, if you go back and look at charts in March, kind of intraday or over a couple days, it was thrown around a bit by all the movement in US yields.
Could we pull back to 1800?
I don't think that low, because I think people are holding it now. It has a safe haven bid. I think that people expect and I do too, I expect kind of pullbacks, right, in markets throughout the year, because there has been so much aggressive Fed rate hikes that haven't yet fully hit the economy that, I do expect some volatility. So I do think people will hold gold throughout the year as a safe haven bid. And I do think there will be times of dollar strength as well on that safe haven bid as too. And I think, we may see, choppier trading in equities. It won't be this like Goldilocks scenario. That
are we going to take out the October lows in your view?
I mean, we could. It just depends really on the U.S. labor market, if how much that slows and how much consumer spending slows. So the Fed has said, they really want to bring down wages, which are contributing to services inflation. And to do that, they need to get a higher unemployment rate. And so when that adjustment occurs, it just depends on how high that unemployment rate goes and, what consumers, the severity of the retrenchment in consumer spending. It really depends on that.
Well, I'm certainly glad you're still keeping your finger on the pulse of the market, Amelia, because
I am, for sure. I'm a macro strategist there. I talk about diamonds and I talk about markets. And I just wanted to ask you guys, this was like, you talked about Aussie dollar and it's trapped between the 68, 66, but this is the S&P 500. So the S&P 500 is really broken. And it's interesting that even with the strength in the S&P, we can't break topside 68 definitively in Aussie. So I just thought I'd show you that.
It's a weak sister. Right? So why don't I wrap it with this? Amelia, are diamonds girls' best friends, or is it community property?
I think diamonds are forever, Dale.
That's a long time, Amelia.
Yeah, it is. So you should buy and hold them.
I'll hold them in my hand with my silver coins, and do people ever take delivery of these things? And do they have to be stored in a certain way if you took delivery and had them at your house, or are they okay in a box?
The majority of our coin holders store at Brinks in Delaware, but there are probably like 98% of them, but there are a small amount who do take delivery at home.
Okay. Well, all of us here, are fans of yours, Amelia, and hope that the wind is at your back on this new venture, and wish you tremendous success with this.
Oh, well, thank you so much. I really appreciate your support, and everyone, happy trading. And these are choppy markets, but I think as a macro person, I think choppy markets are where there's vol, there's opportunity. So
Yeah, and the best way for people to get a hold of you would still be your Twitter handle at Amelia
Yeah,
Bordeaux,
you can reach
or...
me on Twitter at Amelia Bordeaux. You can reach me, you can, reach out to diamondstandard.co, or you can find me on LinkedIn. That's easy.
Okay, my trading warrior sister, thank you for edifying the community and presenting something that people should have an open mind about, diamonds.
Yeah, for sure. Well, thank you so much.
They saved many people's lives in Europe. The portability of diamonds, before Bitcoin, there was nothing more portable. And there were diamonds that got people across the border during World War II and saved their lives. So they're historically have been good for, as far as it helping people out of, life and death crises. So thank you, Amelia.
Thank you. Feel free to reach out, everyone. Take care. Have a good weekend.
All right, you too, Amelia. Okay. And everyone, the Morning Edge, 20 minutes. And I hope that we added value to what you wanted to accomplish this week. Recharge your battery. I know I will be. And we'll see you on Monday. And don't just count your pips, count your blessings. Adios. See you, Sinatra.